Hey everyone, how's it going? And welcome to the next video in the 8 trading course. So in this video, to piggyback off the last video with price delivery and overall order flow, we'll be going over momentum shifts in the market, which has to do with liquidity buildup. We'll be going over mitigation, which I know you've heard me talk about before when price is successfully mitigated. And we'll be going over aggression, which is when the market shifts momentum and price starts to aggress. And you can see literally within the sessions, such as New York session and London session, how momentum and price shifts and how price is truly being delivered and how those orders are actually being presented right in front of your face while retailers are looking at patterns. You can see how each candle is being represented and the way the market's truly about to move and how you can get in on those explosive moves. So to go over the first one, also along with aggression, you have liquidity buildup, which is your momentum shift. So in the market, a lot of times you'll see a trend in market, right? And then you'll see what price start to slow down. You get that last strong final push, and then price will shift and it will absolutely just tank. So this is better known as a shift in momentum. As order flow and momentum and price is bullish, you start to see liquidity buildup happen and price slow down and start to accumulate, which means momentum will slow down, price will stop trending so cleanly, and you'll start to see how you'll have that final push up to really induce all the retail traders. Next thing you know, price will break down, you'll get that failure swing, then you'll get a break in structure. So that would be a confirmed momentum shift. And with structure, it validates itself, and then price would just completely tank to take out all this liquidity that was built up. So that's known as a momentum shift, and it happens the same way on the bearish side when price is trending. Momentum slows down to get that final run on liquidity, and then structure shifts, aka momentum, after taking liquidity, and you have that shift in market structure, order flow, and in momentum. So you'll see a lot in sessions when you have that Asian range. You see how price gets built up from the previous day, and that will be your previous daily high. Price will build up. Usually London Open will come up, will swipe liquidity, and then coming into New York, you'll have a shift in momentum because price slows down. And you'll see how price delivery comes into play during our sessions because during Asian session, we have the algorithm. Price will pull back, take it out, break structure, and then it'll successfully happen. So what is this known as when we have a momentum shift? We have aggression. Now, aggression is when price really starts to come in and you have buyers and sellers aggressiveness in the market, and you can see orders are actually being placed. So when you have that liquidity buildup and that slowdown in momentum, you have that move that takes liquidity and induces, and then you have the session open and you have aggression come in, meaning all the banks and all the stock traders, all the forex traders that are on those financial levels are starting to place their orders. And that's how the market starts to aggress and starts to advance in the way where the orders are actually being placed as opposed to the algorithm. So once momentum shifts, you start to see price really start to aggress and pick up. And that's how you have such explosive moves in London Open and New York Open, because you have that slowdown in momentum, you have that buildup, and then aggression kicks in and momentum kicks in. So it happens every day within our daily cycle. So going back with these three things, you also have everything we've talked about in our previous videos and how price becomes mitigated. So when price is trending up and coming back, this is known as mitigation because price is coming back to hit that order block, hit that supply demand level, and actually mitigate it. So once the momentum starts to shift and you see price start to slow down, what do you have here? You have accumulation and you have unmitigated orders on that internal liquidity level as long as your external liquidity level. So once that session opens and external liquidity is ran, what happens? You get that shift in momentum, aggression starts to kick in, and what happens? You get that valid mitigation, where that, so it validates everything. You have your momentum shift, you have aggression, you have your structural shift, and your run on liquidity. Price comes up, validly mitigates an order block that ran liquidity. You have a very tight stop and you get in on the move before price delivery depicts it. So that's the whole thing with how we trade, is getting in on that move before it happens, knowing what's going to happen, how price is actually going to be delivered with overall order flow, which could be coming off, that higher time frame leg. So everything is depicted here and we tie in every single thing together. So what do we have? We have our shift in momentum here. We have our aggression kick in with that first leg where the banks and financial institutions actually depict it. You have our valid mitigation. We have our higher time frame narrative with order flow. We have confirmed price delivery. And then our last thing is our mitigation, and our structure confirms it. And now we're moving to these next liquidity pools. So now we have to ask ourselves, what does that look like on a real scenario, on a real chart? And we have that right here. So here, again, we'll go to our higher time frame on GU. We'll go to the daily with our current week. What do we see right off the bat? We see all these clean points of liquidity where what happened? Price took out the high right here. So we ran external liquidity on a higher time frame basis, right? And then what happened? Momentum shifted. Everything came into play. Once we ran external liquidity, structure shifted, momentum shifted, and price is starting to regress lower. So order flow is officially bearish. And price delivery is confirming that. Higher highs, higher lows, runs on external liquidity points and internal liquidity points on a bearish order flow. So now all we're doing is targeting all these lows. So going into our current daily, we can already see a lot of clear things. What do we see right off the bat? We see a run on external liquidity, which gave us our reversal to come into what? Our last valid up candle before the down move, which is our order block, and no structure was broken to the upside. So going down to the 4 hour, we see it again extremely clearly. We have a clean imbalance. So all an imbalance is, they call it imbalance, they call it inefficient pricing, liquidity void. It's where you have no of the other color candles, which again, you have here. Now, why is this important? Because, for example, here, do you have any imbalance? No. What do you have? Internal liquidity. So that's why price comes and runs this high. But what do you have right above it? You have what? A liquidity void, aka imbalance. So what I'm saying is there's no structure here. There's no liquidity to be ran. So what is price going to do? It's not going to come into that range. It's going to come into the breaker block because there's no order block that needs to be mitigated yet. So that's why when price comes back later, we'll hit this up candle and we'll mitigate this order block, but there's no liquidity to be mitigated. Same thing here. Here you have your order block, but what do you have and why did price mitigate it? You have internal liquidity right here. So you need to be very careful with that. So coming in off this 4 hour, you have your breaker block. Why? Because there's no liquidity to be ran. Here you have a valid order block, but we don't need to come into that yet. Price will save that for later, right? You have a clean up move and then down break, run on external liquidity, which is right here, right? You have that run on external liquidity here. And now we're looking for that pullback to come into here to distill lower unless structure breaks to the upside. But what do we have that ties it all in together? Right here is the low of that range. So not only do we have our breaker here, we have a clean up candle before the down move. So here we have our order block as well. And price doesn't have to hit the level perfectly. We're going to go down to our lower time frame and really identify what we see. And we have our imbalance. And we know that what on the higher time frame we're looking for sell. So all we're looking for is this pullback, which is our liquidity buildup, right? We want our momentum shift, and then we want aggression, and we want valid mitigation. So we'll start to go down on all of our time frames. So right off the bat, we've identified a clean order block on the 1 hour. Now, how is this one valid? Because here you have an up move, price comes down, creates a new low. So that's why this up candle before the down move would be validated, because this move up created that high, which created a new low, which this high created a new low. Now, why is this valid, even though it didn't mitigate this order block? Again, there's no internal liquidity here. You have a clean imbalance, so it hit off the breaker and it created a new low. So this is a valid order block. So again, we've depicted our valid order block. We have a clean imbalance, and we're looking at how price is going to go up, because if not, we're going to be looking for sells. So what do we have here on the hourly, on the move up? You have a valid run on liquidity. Price pushes up. Does it break any type of structure? No. But what does price do? It fails to break the low. So what am I looking for to sell next? Price to either run this low to look for buys, or price to run this high to look for sells. Now, even though price ran this high, guess what? Structure never confirmed it. So we didn't have a shift in momentum, because momentum was still bullish and there was zero aggression on the sell side. So price comes down, you have that first break in structure, right? New lower low, run on internal liquidity. But this is where price and momentum shifted to bullish from bearish. And why I would not consider sells is because price comes up, we get a new high, boom, price fails to break this low. And then what do we get? A break in structure on a bullish high, so we have a new higher high. So automatically, what I'm looking for are buys, but my buys have to be validated, and I have to have a valid order block to validate our price delivery, which is bullish, our shift in momentum, and aggression to the upside. Now, why would I not buy off any of these blocks? Because they gave no clean reaction, right? They broke zero structure. So I know there's no breaks to the downside, and we're bullish now. So when price comes, and remember how I said every move needs liquidity, this move down swipes all this internal liquidity, right? But I still wouldn't buy directly off here. We mitigate. Remember, I talked about mitigation. Price never came back to mitigate this order block. Also, our timing. So this was an Asia session, so I wouldn't have taken this. We mitigate our order block, and what happens next? We get a break in structure. So automatically, I'm looking for buys off where? The last. Now I'm using this one, not this one, because this is the last down candle before the up move, and we can depict it on a lower time frame. But that's my point of interest that I identified. Also, we're coming into London and New York. So we have everything lined up. We have our shift in momentum to the upside. We have aggression to the upside with this strong move, and we have a valid mitigation. So going to the smaller time frame, we can see cleanly last down candle before the move up. So I'm going to use the arrow to depict this candle. What do we also have here? We have internal liquidity. Why? Did that create a high to create a low? No. So this is our trap. So I want this to be ran out, which it just ran out to the pip. And this is how we get those clean sniper entries. You can see just to the pip how it got ran out right there. So again, everything is lined up. This is also within our overlap with London, New York. So timing is there. We could go to the smaller time frame again, but we don't really have to, because everything is lining up. Yeah, see, here's where we start to get a lot of noise. So the 15-minute is very clean to me. Again, long on the inner run of internal liquidity. Again, we're going to target our point of interest. And then my stop would not be all the way down here, because that's too much risk exposure. So I actually want to go ahead and take a look at how we reacted off after the run to see if we could have got a much better entry, because we want to minimize our risk. Okay. So again, right here would have been a lot less exposure for risk. Created the high, came down. Here's your last low to the high. So we would have entered right off there. So we would have had our buy there. Stop would have been a lot tighter, a lot more clean risk to reward. We could have targeted that last previous high that was created, and we would have been running a 1 to 7 R, and then we could have even held it all the way to our area of interest, because again, what are we having? Breaks in and we're maintaining these lows. So again, here, what do you see? Run on internal liquidity, break of structure, and that low was not taken. It got very close, but it respected it. So again, you could have been running a 1 to 7R, and then your extended target would have been a 1 to 12. So that's how we tie everything together. Now, going back to our higher time frame narrative and tying everything together, what do we start to see right off the bat? Here, we're seeing all this structure being confirmed, right? Highs and lows, runs on internal liquidity. But what do we start to get here? We get that big break, and we now prices left unmitigated as this mitigated everything here, right? So now what am I ultimately looking for? Since we don't have valid mitigation and we're coming into our area of interest in our order block, I'm looking for a shift in momentum and aggression to the downside to validly mitigate all this and to pull back and mitigate our sell orders, get that structural shift, and run this next external liquidity point. So we can see that coming in. What do we get? Right here is our Asian session. This is right after New York. So price starts to slow down. So we're getting that liquidity buildup, that slowdown in momentum. So which we have accumulation. Here we have that final up move I was talking about earlier, which is our manipulation. And what do we get? Right when we hit our order block, boom, we get our first sign of aggression in the market, and then we pull back and we get that valid mitigation. Now, what I need to be confirmed is that new low. So now I'll know we have a valid shift in momentum. We have our valid aggression to the downside, and then mitigation is validated. Now, what do we get perfectly here? Price comes up. This is London open. We take out that false that false Asian buildup. So this was Asian session, and we'll get into timing later on in the course. But again, you can see how price failed to, and it goes back to what I said before. Price failed to make a high and it failed to make a low. So that next point of internal liquidity, because this ran external, that's going to get ran. I'm going to look to sell. We get London open. We run the Asian highs, also the false point of structure, the trap, which traders are trying to trade, even though they think this is all a consolidation. Where do we respect? The last up candle before the hold down move. So this order block was successfully respected, and you could have caught a sniper entry here. But again, I like to wait for a lot of confirmation. So what do we get? We get the full on break of structure. You can see even the push up is not validated because this push up broke zero structure. And what did I talk about the imbalances? We're not going to mitigate that order block. There's no internal liquidity here. We already took it. We have our breaker. What is this? This is still, again, New York open. Well, New York session, coming into the end of New York session. So here is your first entry, your second entry off that breaker. And then as for a cleaner, more low risk entry, coming off the fake order block, this fake structural point, we're looking at structure. We get the breakdown, pull up. The high is maintained at New York because this was the London high where we cleared out this and we got that breakdown. Again, even on a much, much smaller time frame, we have a secondary break, which we have here. So we just pierced that liquidity point. We have the breakdown, and now we're pulling into the block. So this was my entry, and it's going all with everything. So we have our shift in momentum, which you can even see on the smaller time frame how you have the liquidity build up off our order block, and then price shift. So we have our shift in momentum to the downside that was confirmed with structure and runs on liquidity. We have our aggression because the moves to the downside are so strong because that's the orders that are resting in our market after we run liquidity. And we have valid mitigation because everything is being validly mitigated, right? Validly mitigated the order block, came down, validly mitigated the breaker, and now we're mitigating on this inducement trap. So again, New York open, we sell down. So we have our first entry, our second entry, our third entry, and where are we targeting? That external liquidity point. So this validates everything. So we have our structural points, our higher time frame narrative, our major liquidity zones, our major points of interest. And now what do we wait? We wait for the market to reveal its hand with how price is going to be delivered. We have our slowdown, our liquidity buildup, our shift in momentum. aggressive move to the downside, and then valid mitigation to validate the structural shifts. And now where we can move to the next run on the next liquidity pool. So I hope this is starting to open your guys' eyes and really piece together how the market moves and how price is delivered in different cycles with different timing, which we'll get into a lot more in depth in the next videos. But you can slowly start to see how we start to piece every little thing together on how price is delivered day in and day out and how the market truly moves. So I hope this helps, and we'll see you in the next one.